So what's good everyone, we are back with yet another weekly update, and like last time when I said that IT sector is forming a double bottom formation here and it broke out, right? But then it failed to sustain this breakout, and right now it is trading below the level of breakout. So we would remove IT sectors from our watch list. This breakout is not sustaining right now.
Thank you, Thomas.
Talking about KPIT Technologies, it was forming a VCP type formation over here, but then it seems to make a lower low below this area, right? If it would have formed something like this and then broken out, it would have considered VCP, but right now it's making a lower low. Like, yeah, we shared it would be a good buy if it closes above 734, but it never closed about 734, so hence KPIT Technologies is also out of our watch list.
Thank you, Thomas.
So a new stock which I have in my radar for this week is
Cockshot.
So as you all can see over here, metal sector formed a VCP, or you can say cup and handle pattern. It formed a cup and handle pattern over here and then broke out, confirmed the support on this area, and then it is rallying upward, right? So similarly, the stocks from metal sector can be considered a good thing in our watch list. So here we have from metal sector, we have Steelcast. So Steelcast was consolidating in this range from around 500 to let's say around 420 since like August of 2022, right? It was consolidating beautifully over here, and finally this week it seems to have given a breakout, and that too with the support of volume. Here you can see the spikes in volume, right? The volume is nearly 10 times the past 50 days average volume. So this can be a good entry right now. Let's see how much it's up from the breakout point. It is up around 3.44% from breakout point. So anyway, it can be a good entry over here. Or else if you want to consider a lesser risk, you can wait for it to test this 500 area, and you can take an entry which has low risk. But sometimes what happens, if stocks break out, it doesn't retest the previous highs the same way it happened with Gravita, right? Gravita is also a metal stock, and it broke out from this cup and handle pattern, but this skyrocketed without any retest, right? So when the stock breaks out with a strong momentum, it does not necessarily test the previous support. But Gravita, when it broke out, I shared on my Twitter over here, right? I shared it on 8th of December that it is forming a cup and handle pattern, and it in fact broke out with the support of volume. So if you want quick updates, so it's not possible to quickly make YouTube videos. So for quicker updates, you can consider to follow me on my Twitter and also to join my Telegram group. The link to both of them is shared on my description box below. So Gravita is far extended right now. I would say it's 16% up from the breakout point. So if you have checked the tweet and took the entry on Gravita, then it's a good thing. But right now I won't suggest to get, or if you want to wait, you can wait for it to fall back to this area of around 400. Then it can be a good entry. So for these two stocks, let's also have a quick look at fundamentals. So Steelcast, it's in business activities and manufacture of wiring and wiring devices. So it has an operating revenue of 408 crores on a trailing 12-month basis, and it has an outstanding annual revenue growth of 90%. Also pre-tax margin of 15% is quite decent, and return on equity is also 21%. So fundamentally all the factors look good for this particular stock, as well as the price trend is good, 80. So like it happened on Friday, the heavy FII is selling, right? So when the market is weak, and during that time the stocks that has a good price trend, the relative strength, they survive, right? So it has an RS rating of 80, and when entire market collapses, there's high probability that these particular stocks with good price trend would stand, and it would not fall with the market. And when market starts recovering, such stocks moves with stronger rally. So yes, I would consider to take entry in the Steelcast. By the end of the day, the volume are also quite decent. Moving on, let me check the fundamentals about Gravita. Gravita once again has an outstanding revenue growth of 57%, quite okay pre-tax margin of 7%, but ROE, return on equity, is exceptional. It's 36%. Also, the company is not debt free. It has a debt, but 28% debt is considered as a reasonable debt, right? So if you want to check out fundamentally this stock, it also looks good, and it's in a business activities of manufacturing of lead, zinc and tin products and alloys. So yeah, metal sector is broken out, so you can hence consider to take entry in metal stocks, and Steelcast and Gravita are my picks for the metal stocks. So let's update about the stocks which we discussed on our previous videos. Sansera is an auto stock, but yeah, it broke out, but it didn't quite broke out with the support of volume, hence I didn't took entry in Sansera, and right now it's trading below this breakout point. It's trading below this neckline, right? So yeah, we will anyway keep Sansera on the watch list for maybe some future potential nice price action. Talking about lemon trees, it anyway broke out from daily charts, right? So when a stock breaks out from weekly base, there's high probability that the breakout will sustain, but here it was on a daily chart and it kind of broke below or broke down the neckline, and right now it's about to make a lower low, which is not a good sign. It may indicate the beginning of a downtrend. TMB also made a VCP, a volatility contraction pattern, and it broke out with the support of volume. Yes, the volume was quite decent, around 7 times the average 50 days volume, but then the volume are quite low, and yeah, it's taking support of this neckline. So I am holding TMB right now and would consider to get out of TMB on two conditions. Either if it makes a lower low, like it trades below this zone where it made the last leg of VCP at around 506. So if it closes below 506, then I might consider to empty half of my position, and at last if it closes below the 50-day exponential moving average, I will get out from TMB. But right now it seems to sustain the breakout. It's taking the support of neckline. It's trading exactly at neckline, right? So I'm still holding TMB. HCG, like I discussed on my previous video, we will get out if it closes below the 50-day exponential moving average, and it did close below 50-day exponential moving average on Thursday, and hence I'm out of HCG, also removing it from my watch list. Alicon, I'm holding Alicon because it seems to haven't tested this 50 days exponential moving average yet, but it's struggling to keep up with the price action. Who knows, I might get out of Alicon this week if it closes below the 50-day exponential moving average, like already trading below this neckline. So if you want, you can consider to empty half of your positions. Hariom pipe, it's going great. It broke out from this VCP. So this VCP was on a weekly pattern, right? It broke out from this VCP and it considerably tested the support of 10 days exponential moving average over here, and then it's once again making higher highs. So Hariom pipe, which we shared a couple of weeks ago, right? I shared Hariom pipes in this video, I guess. Yeah, I shared Hariom pipes in this video, which was 12 days ago, and it's doing quite good after that. Kalyan Jewellers I shared in my last video. Kalyan Jewellers also broke out from daily charts, so probably it won't sustain that much, but I wanted to take a trade on it because yeah, it was showing nice volume, it was showing nice momentum, so I took entry on Kalyan Jewellers, and it did tested the 10-day exponential moving average over here, but right now it's trading above the neckline, and hence I would consider fairly nice potential on Kalyan Jewellers. I am holding Kalyan Jewellers.
Everybody do the flop!
IRFC, I exited IRFC over here when it made a bearish engulfing pattern, and since then it was on a downtrend, but over here it tested the 20-day simple moving average, and right now it's forming a bullish engulfing pattern. So I'd wait for the day close at around 3:30, and bullish engulfing can be considered bullish for obvious reasons, and if there's a decent spike in volume, at least 2x. Right now it's 20 million less than 2x. So if I get those remaining volumes, I would once again enter IRFC because yes, it has given me a fairly decent profit earlier. I took entry when it broke out from this inverse head and shoulder, and I made nearly 45% profit in it. Yeah, 45%. but a pullback was necessary, right? So it pullbacked, and what's more necessary is when the stock pullbacks, the volume should fall down. So you can see the volume fell down over here. So maybe it will continue its rally after testing the 20-day simple moving average. So I might consider to take entry on IRFC once again. So coming to the community question, Jai asked the question last week, can you share some insights on Paras Defense and MTAR Tech, which are from defense sector, which is in uptrend nowadays due to recent government announcements? So regarding government announcement, I have to be honest, don't follow much announcements because I believe that everything tunes in on the price action, right? So let's discuss about Paras Defense firstly. Paras Defense, as you can see, is down around 50% from its all-time high. So a typical retail behavior is to buy stocks that are in discount, right? But it's like catching a falling knife. If you put your hand when you are trying to catch a falling knife, it will bite away your hand, right? So if it is fallen a 50% from 1200 to around 600, it can surely fall further 50%, it can trade around 300, and then it can surely fall further 50%, it can trade around 150%. So with stocks, it goes in similar to Newton's law of motion. A stock in uptrend or a stock in downtrend tends to continue its trend until and unless it's stopped by a strong base formation. So if it's about to reverse, it will make a strong pattern, it will make a strong base formation before giving us a chances of reversal. And another thing why I don't trade stocks that are down from their highs is, so when it started falling over here, right, many people must have took entry over here because yeah, it was falling and people wanted to buy from their discount, right? So if I took an entry over here, let's say at around 800, right, and then the stock is trading at 617 right now, so what will be my psychology as a human? That this stock is 23% down. I just want to recover my loss. So if this stock comes back at 806, I will empty my bags, right? I want to break even. I don't want to, hold a stock that can once again give me losses. So that's the same psychology. There are various supplies at different supply zones, right? Some supplies can be here. So if a stock, like let's say it starts moving up, then there will be a bunch of people over here. As it's clearly seen from the charts, bunch of people, this area is a resistance and a bunch of people can sell over here. So my stock, once it releases from here, it can fall down further. Once again it will test it, this can fall down and it can finally break it. But then once again it will take resistance from here and fall down. So why do I want to, lose my time in a stock with high risk, a stock which has a high potential of falling down, right? So I would find such stock shitty which has a 50% fall from its all-time highs. If you see some potential fundamentally, or if you are bullish with the government announcements, you can consider buying this stock. But right now it costs me opportunity costs. So there are various opportunity costs to buy and hold the stocks which have fallen from their all-time highs. So people generally ask me that why are you buying stocks at their all-time high, right? So I took an entry over here in IRFC, which was definitely not an all-time high, but I took my further entries over here at all-time high when it broke out from this range, right? This was an all-time high. I took an entry and many would have avoided taking an entry because basically the stock is at an all-time high. So how did it went from 26 to a new high of 36, right? It went up and went on creating new highs. It created a new high at 29, it created a new high at 31, it created a new high at 35. And then it finally created a new high at 37. So you would say, what if I enter at 37? So basically we don't enter at 37 because there a strong pattern wasn't forming. We enter at all-time highs when the stock is forming a strong patterns. So right now it was forming, IRFC was forming a strong pattern to sell. It was forming a bearish engulfing. So I moved out of it. But the thing is, when the stocks forms new highs, no one is waiting for it to break even their losses. No one is eager to sell out of it. So potentially the stocks which are at an all-time high provides me with a quick momentum which I necessarily like. I wanted a quick 45% returns over here, and it's only possible when a stock is new, it's breaking out of its IPO base, right? So with Paras Defense, I won't be able to achieve those quick returns because there are various overhead supplies. Not just at 806 level, there is supply over here also at 666. So the stocks definitely slows down at each and every holes, right? It's a local trend instead of an express trend which goes up straight like a rocket. The same way the IRFC stock went, right?
ये बड़ी अच्छी बात कही आप.
So I'm not entering Paras Defense. Let's talk about MTAR Technologies. MTAR Technologies is also for the, I forgot one more point with this. Not just the resistance is over here, but moving averages, which generally institutions and many traders like us also considers a good zone for support and resistance, they will exit, right? They will exit when this stock will test a 200-day simple moving average. There are there's bunch of resistance from moving averages over here. So this will definitely slow down the action from this stock. Like it did over here. It was pumping, but it then took resistance from moving averages and these horizontal supports, and it started to fall down. So moving on to MTAR Technologies, it's very well trading above its moving averages, which is a good sign. The moving averages are pointing up, not the 200-day simple moving averages. So ideally 200-day SMA should point up, but anyway, other moving averages like 50-day SMA and 20-day SMA are pointing upwards. So it's a good sign, but only thing that's bothering me is the stock is 32% down from its all-time highs, right? So this thing will once again give me various supply when it tries to create its new all-time high. When it tries to move up, it will have a resistance at here. It will have a resistance at here. So why would I want to slow down my movement, right? So that's why I'd avoid MTAR Technologies as well. But if you want to take entry on MTAR Technologies, it broke out from a rough triple bottom type formation. It's not exact picture perfect triple bottoms, but patterns are generally not picture perfect. It's a rough pattern, yeah, right? It formed first base over here, then it tested this neckline, formed second base over here, once again tested the neckline and formed third base over here, and it finally broke out on Friday with a very decent support of volume, nearly 10 times the 3 days average volume, right? And similarly, it formed a triple bottom type formation over here when it formed its bottom, right? So first base was here, second base was here, third base was here. It's forming a similar pattern, a very similar pattern over here as well. So if you want to take some risk, or if you want, not that quick of a return, you can consider to take entry in MTAR Technologies. Like you said, it's a defense stock. Let me also check on MarketSmith. So yeah, if you want to consider, it's fundamentally also strong, pretty obvious annual revenue growth of 34%, pre-tax margin of 26%, and ROE of 11%, and a reasonable debt to equity of 5%. So yes, fundamentally it is good, but the only concerns I have technically is it's 30% down from its all-time highs. But another strong point technically is it broke out from this triple bottom formation, and right now it tested the neckline and it very well passed the test. It's around 3.7% from its neckline. So MTAR Technologies can still be a good entry in my humble opinion. But Paras Defense, I personally won't enter Paras Defense. So yeah, that's it for today's guys. If you have any other questions, you can obviously drop it down in comment section. I will cover it in my next video, or if it can be quickly answered, I will answer in comment section as well. If you like the video, consider to like it, sharing it with your friends, and subscribing to the channel. Have a nice day.